4 o'clock. I'm sure the sessions earlier were interesting. Quickly coming to the topic, it will be a 10 to 15 minute session just on the budget highlights. I'm sure the professionals here will look into the detailed notes later. So, one specific quote from FM's speech today, which indicates the genesis of the budget, I would rather say. It was Viksit Bharat, and they had pointed out 5 basic pillars of Viksit Bharat, which was the proposition of today's budget. It was zero poverty, 100% good quality school education, access to high quality, affordable and comprehensive healthcare, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In the last few budgets, we have seen a tremendous change where the finance minister has tried to implement more from an employment perspective, from healthcare, which has been given more emphasis. So this was basically the budgets, and various allocations were based on these 5 fundamental pillars. I'll quickly run through only the taxation perspective which was brought up. Now, in the speech, there were a few highlights, few of them very welcoming, few of them we have to see how it is going to get implemented. The first and the biggest one was taxpayers with annual income of rupees 12 lakh is not required to pay tax under the new regime. So they have given a rebate, the new tax rates have been prescribed. So up to 12 lakhs if your annual income is there, then because of the rebate, the net impact of income tax will be nil. The next is, because of this, the impact was foregoing revenue of about INR 1 lakh crore in direct taxes and INR 2,600 crore in indirect taxes. The next and the big one was a new income tax bill. This is not the direct tax code, it's a different bill which is going to come on the path of Indian Bharatiya Nyaya Sanhita. That was the promise made by the finance minister. Now, what were the specifications indicated? It will have half the chapters and words as compared to the present law. We all know how voluminous the Income Tax Act and the rules is, though it is quite a settled law, but then there's always a need for the law to change, and hence this proposal has come and the bill is likely to be introduced in a week's time. Next, new bill to be simple to understand for taxpayers and promote ease of administration. And then last is rationalization of TDS and TCS rates and increase in thresholds. Now, coming to enhanced limits for MSME, the finance minister and the government has laid a huge emphasis on MSME, which they do believe is a huge employment generation and a revenue generation. Hence, they have increased the limit for both investment and turnover. For the current investment for micro was 1, it has been increased to 2.5, for small from 10 to 25, for medium from 50 to 125. Correspondingly, there is also an increase in turnover from 5 to 10, 50 to 100 and 250 to 500. Now, as I was indicating, there has been a change in income tax. The slab rates are now as follows. Up to 4 lakhs, it will be nil. Then 4 to 8, it will be 5%. 8 to 12, it will be 10% with eligible rebate, which will bring the net effect to 0. Next is 12 to 16, it will be 15. 20% will be 16 to 20, 25, and then 30 will be about 24. So this is the new tax rate which will be implemented effective from the next financial year. Now, few other changes where annual limit of TDS on rent has been increased from 2.4 lakhs to 6 lakhs, which brings it down to 50,000 per month. So a person who is receiving payment of rent up to 50,000, the person who is making the payment is not required to deduct TDS. Next, period of incorporation for startups is increased by 5 years to enable startups to incorporate before 1/4/2030 to claim deduction of 100% on profits and gains for 3 consecutive assessment years out of 10 years. This has always been there. Now they have increased the incumbent period from which was about to lapse to 1/4/2030. Next, decriminalization of delay in payment of TCS up to the date of filing of statement. This was done in in light with the earlier TDS decriminalization, TDS was decriminalized, TCS has also been bought at par. Next is omission of TCS that was applicable on transaction relating to sale of goods. Now, there was always a dispute because there was a TDS and a parallel TCS on the same sale of goods. Now, they have clarified that only TDS will be applicable. However, the exception is if you have not submitted your PAN, then TCS will also be applicable. Then, a very sector-specific benefit for ship leasing units, insurance officers and treasury centers of global companies set up in IFSC. Cut-off date to claim benefits and IFSC is extended to 31/3/2030. So they are all looking at 5 years from now. Next, transfer pricing, a welcome move for professionals because you do not have to visit the TP officer every year to get the transfer pricing confirmed. Now what they have said is reference to TPO for computation of arm's length price will be done in a block of 3 years. This has been increased from 1 to 3. The assessee must exercise an option for the above effect. This is yet to be prescribed. The TPO shall issue within 1 month the order and declare such options. This will reduce compliance and administrative burden. Now, the way they have prescribed is the next year and the subsequent 2 years are what is going to be considered in this block of 3 years. Again, subject to the conditions, there is no change in either the transaction, the holding pattern or any of the other factors which we do consider while determining the TP value. Next, again a welcome move, time limit to file updated returns for any assessment year has been increased. So earlier 2 years were given for you to reassess your income and file a revised return. Now that has been increased to 4 years. However, they have said returns cannot be updated if a notice has been issued under section 148A for conducting inquiry in cases where the escaped assessment exceeds 50 lakh INR. So again, a welcome move, so you can have an additional 2 years to reassess your liability and file your revised income tax return. Now, we'll quickly move to the changes in indirect tax. Now, they have rationalized the customs tariff. A number of rates were prevalent, which led to a lot of confusion, and I would rather say also the implementation, and it wasn't a trade-friendly measure. Basically, the number of brackets under which the customs duty was levied. They have now brought it down. The removal of 7 tariff rates, which is beyond the 7. So 7 were removed earlier. Again, 7 more are removed. Hence, we are currently left with 8 tariff rates, including the 0 rate. Next, levy not more than 1 cess or surcharge. Hence, proposal for exemption of social welfare surcharge on 82 tariffs which are subject to cess. Now, as we all know, customs duty, we had BCD, we had SWS and various forms of cesses. Now, there were certain products which were subjected to both SWS and cess. Now, they have said that 82 tariff items will be exempted from SWS, which means they will be exigible to BCD and the cess only. Relief on import of drugs and medicines. Major relief for patients suffering from cancer, rare diseases and other severe chronic diseases. 36 life-saving drugs and medicines added to the list of medicines fully exempted from basic customs duty. 6 life-saving medicines added to the list attracting concessional rate of duty. Full exemption and concessional duty applicable for manufacture of bulk drugs. Specified drugs and medicines under patient assistance program which are run by pharmaceutical companies are fully exempt from BCD if the medicines are supplied free of cost to the patients. So, though an individual had that option to not pay customs duty if there was a for his personal consumption, but subject to the condition of tariff, now they have included a lot more items in the tariff specifically for chronic diseases including cancer. Now, new 37 medicines along with 13 patient assistance programs will be added, which will mean that in the forthcoming years we will add few more line items to this already existing exemption list. Now, amendment to customs, again, we have seen one amendment in income tax which has increased the time limit for redoing your self-assessed income tax liability from 2 to 4. They have brought in something very similar in the voluntary compliance. I'll come back to the provisional assessment. In voluntary compliance, what they have said is post the clearance, if the importer feels that he has not declared the correct liability, maybe in terms of value, rate, or anything, he has an option to declare the same, pay the interest, but no penalty. This shall not be applicable where the department has initiated proceedings, and the time period for this is 1 year. The first one is the provisional assessment. Till now, there was no time limit under Customs Act for finalizing provisional assessment. Now they have specified a timeline of 2 years. This is a trade-friendly measure. It will also increase the documentation required, because what happens is you do a block finalization of assessment after 3 years, 4 years. Now you will have to do it at 2 years. Even the department is compelled. Sometimes what used to happen was the assessee used to submit the documents. Department did not have time limit, so they used to not process it in a time-bound manner. This is a provision which will now make them do it within 2 years. Now, payment of duty under revised entry, the relevant date in case where the duty is paid under revised entry under section 18A is the date of payment of duty. Now, why is this relevant? Now, I made a self-assessment, cleared my goods. Within 1 year, I have gone ahead and redone my assessment indicating some change of either HSN or value. Now, after that, the time limit will start, which means the assessment time limit of 2 years and 5 years under section 28 will only begin after I make the amended bill of entry filing. Now, changes with respect to settlement of cases. Interim board for settlement constituted under Central Excise Act has been added as an additional authority for settlement of cases. Similar amendments in Central Excise were done in relation to the same authority. Earlier we had Settlement Commission, which was done away with. Then they have brought in an interim board, which is now the body which will undertake the settlement of cases. Then extended time use for end use. There are certain exemptions which are eligible only if I satisfy the end use condition, which could be import, manufacture, end use, or import and end use. Now, there was a time limit of 6 months which was prescribed. Now, that has been amended. They have said instead of 6 years, you will get 1 year for to produce the end use certificate or to show the end use has been achieved, which was intended to. And also the returns for this, which were filed on a monthly basis, have moved to quarterly basis. Very brief on the changes in the customs rate. We have just captured a few of the major items and the new rate and the old rate. Articles of jewelry and parts thereof, from 25 it has become to 20%. Synthetic flavoring essences and mixture of odoriferous substances used in food and drink industries, from 100 it's been reduced to 20. Motor cars and other motor vehicles principally designed for transport of persons, from 125 it's been reduced to 70. Lab chemicals, this is very specific to chapter 98, has been reduced from 150 to 70%. And the last is solar cells, which is reduced from 25 to 20%. They have also, on the other hand, increased tariff rate for specific commodities. Knitted fabrics is one. Second is IFP, interactive flat panel displays. This they have increased from 10 to 20%. There has been always a dispute whether an interactive flat panel is either a TV or a computer, because both of them attract different rates of duty under GST and under customs. There is a lot of litigation going on this point. So to bring maybe a parity in the industry, they have said the customs duty is increased to 20%. One corresponding change they have made is if you import LED modules and make a flat panel here, the import of LED modules, the rate, very few amendments, but anyways, we'll quickly run through it. The first is RCM was not allowed to be discharged by an input service distributor. The law has now been amended where an RCM liability can be discharged by an ISD for corresponding subsequent distribution to respective units. Next, time of supply relating to vouchers has been removed. A move which we will have to see what has happened, because the Supreme Court, Karnataka High Court and Supreme Court have taken a view vouchers are not subjected to GST per se. This was the provision which was relied upon. Obviously, that taxability has been clarified in a circular, but removal of this section would mean that they may have to bring in some other provision to cover this lacuna which has been created in time of supply provision. Next, we are all aware of the Safari Retreats decision, which read this provision as is, the plant or machinery in 17.5C versus plant and machinery in 17.5D. So everyone who had constructed a mall, constructed a warehouse was eligible to take credit. the government has made an amendment now to say a retrospective amendment to read plant or machinery as plant and machinery, and they have specifically stated that this is notwithstanding the judgment passed by any court of law, which means the position changes, and now those entities who have availed credit may have to reverse it, and department can initiate proceedings in light of the amended law. Next, there was no pre-deposit required if an order only confirmed penalty, no interest and tax, only penalty was there, no pre-deposit was required. An amendment has been made that 10% pre-deposit is mandatory to the extent of penalty imposed also. So if I have a penalty of 1 crore, I have to pay pre-deposit of 10 lakhs to entertain the appeal. Same thing, if I go to the tribunal, I have to pay additional 10 lakhs. This is to bring it at par with the erstwhile central excise and service tax regime. Next, a unique track and trace mechanism has been introduced for certain goods to be notified by central government on recommendations, and penalties of 2 lakhs or 10% of the tax payables on the such goods has also been prescribed. Now, we are not aware what would be the goods. Likelihood they might be those goods which are prone to tax evasion. Could be tobacco, could be gold, could be all of those which the government feels is prone to tax evasion. They may bring it under this section. He indicated this was pharmaceutical is still governed by there's a board which governs it. This is very specific to tax laws, so maybe the indication would be for tax. Could be pharmaceutical, very much, could be. Next, they have inserted one more entry in the Schedule 3, which is supplies which will be neither be construed to be goods nor services. Earlier, from an FTWZ to an FTWZ was included. Now they have specifically included from an SEZ, supply of goods warehoused in an SEZ or in an FTWZ to any person before clearance of export or DTH shall be treated as neither good. So we all know that there's a high sea sales concept which is available. Now once the goods have entered into India, high sea sale is no more the concept. However, you can still have a trading, you can have a sale of goods by transfer of title. If that happens and the goods remain in SEZ or FTWZ, no GST is payable on such supply. That is what this clarification is. Okay. So that was a very brief about the budget which has come.
Relief, where up to 60,000 you can take as 87A relief. Here it is mentioned as a except capital gain. Recently, Bombay High Court ruled that 87A relief is applicable for individuals. You cannot impose a difference between the capital gain and the taxable income for individuals. You can apply for all other persons. That is what 17th January judgment has been clearly given. I think 68 pages it has been given. So what is your perception on that?
The Bombay High Court goes by the understanding which we all of us had when we studied taxation, saying when you compute the end liability, it has to be based on slabs. Now, the way Bombay High Court has said, in fact, when we were listening to Nirmala Sitharamanji in the morning, she specifically again mentioned it will not include capital gains. Now, like they have made a change in the GST provision, which they say, notwithstanding any decision, they might bring in this again in income tax. We've of late seen a lot of amendments intended to get over the judgments which have been passed. Could be assessee friendly or could be department friendly, but we have seen this. And again, because when we heard the budget, she specifically indicated, saying it will not include capital gains. So now we'll have to see whether they take that to Supreme Court or make an amendment in law to bring it in line with their understanding.
Because even that relief has been given for only individuals, not for others.
There's a different slab rate. The specific 12 lakh rebate has been given for individuals. And this, to be fair, this gives the understanding which all of us have, saying 12 lakh, all incomes should be included and then you can calculate. But obviously, the government feels the other way around. So.
Okay, thank you then. Sir.